Good morning, everybody, or good afternoon, depending on where you are across the United States today and overseas. Welcome to the How to Make Money Trading Stocks webinar. Joining us today from Dallas is Mike Traeger.
Hello, I would say good morning, but it's not morning here anymore.
And then Michael Bishop is off. He has started his Christmas partying early, and I tell you, Mike, those guys in Switzerland, they like either go on vacation or party all the time.
It's a European thing, I think, and yeah, he takes a lot of time off, and good for him.
And so anyway, want to welcome everybody. We're going to go through today's session and talk about what the market's doing. I want to remind everybody that all the materials we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. There's Michael disclaimer, if he were here. So a lot of folks who join us on the weekend and also see the webinar via YouTube and or on the website, they don't know who we are. But here's a little bit about me, and I just leave that up there quickly. And Mike, it would be really good if you could do one of these ups, and that way you could have one for both of us. Mike. Oh, I lost Mike. He'll be back. So we have been just basically doing some really great training over the last few months. We've really set up a really good foundation. And for those of you who are looking, the premium members who are looking for where is the past presentations, they're under the video, training video tab on the main menu or the home page of the website. And the first four videos, the first three in particular, are basically they cover the basic strategy number one, which is stocks and ETFs. Strategy number two, the options strategy, and strategy number three, the wealth and income building strategy. And so all those are covered. And then below that is where we start putting in the individual week, Wednesday night training sessions, and sometimes some special training sessions. Hey, be looking in your email. I did a presentation last night for the Atlanta Bold Traders, and they linked me into some guys from Nashville, and did an hour session on objective entries and objective exits. And so I'm going to send that out as just a free training session to show my appreciation for both premium members and also people who just follow the active trend trading videos and all that type of thing. Just like I said, year-end gift from me for appreciation. Barbara asks, when's the next BAM meeting? The next BAM meeting will be on the, I believe we have that scheduled for the 12th. The update shows on the BAM website. So next we're going to be talking about how to listen to the market. In other words, when you go in and you see that chart for the first time, or you've been away from the market for a while, how to go in there, assess from that day's market, that week's market charts, where and what's going on with the market. Let's see if Mike's going to join back with us. I don't see he's popped back on yet. Okay, I'll keep looking for him. So let's get an update for today. This week, kind of our question for both Mike and I are both asking this question. Are we there yet? In other words, have we reached a potential top in this really great rally that's been going on since the election? And so we may see over the next couple of days just a move sideways as we wait for the Fed and what's expected from the Fed, which is to increase rates. And so SPX from last Friday, SPX went 5 days of the Trump rally continue. NASDAQ has been catching up a little bit. The NASDAQ composite has in fact broken to all-time highs, and then the Russell is doing a hard rebound. The big thing that's on the calendar next week is the Fed meeting and the potential, and very strong potential, of higher interest rates coming into place. We've been chatting a little bit. Is the economy good enough where the Fed may go, you know what, let's raise rates a full, half percentage points? What will that do to the market? Clearly, the anticipation going into the Fed with what we've seen with the market this week is it's almost as if the Fed meeting in December, even if they raise rates, may be not important. It may be just basically they may just graze over it, and the market may continue to rally. We do need a healthy pullback. Both the surges up from the time of just prior to the election to the little surge up that's happened this week, each of those has been just really heavy and a real steep incline to the upside. And those steep inclines they can go on for a while, but when they do correct, they tend to also provide a sharp correction. So we'll see if that transpires. But December 14th, which is next Wednesday, we have our Wednesday night training. We will know what the Fed is going to do. Here's a percentage of stocks above the 20-day moving average. We've chatted about this, several times. When the numbers get up close to the 80% level, typically we're not looking at that for a full turnaround in the market, but the market does seem to run out of gas a little bit when it does that. Mike and I are typically looking at this particular indicator, and then we combine this with some other proprietary indicators we look like to drive the early warning alerts service. And as you can see, when it gets down here in the below 30 level, lower the better is what we're looking for. And one thing that we've noticed, and we're correcting in the active trend, not correcting, but adding an extra element to the early warning alerts so that we pick up on some of these straight up off the bottom rallies so the plan will be in place. I'm in the process of, as I've said, back testing that now to make sure that adding that element will in fact still work across multiple types of market conditions. I'm going back and rerunning all the back testing we did going back to 2002, and so I'm about through 2007 and a few, I'm including 2015 in that, so I actually have an additional amount of back testing on this. But at this point, we're seeing as the market has moved up to its, breaking out to the all-time highs, and this is the spiders, which is a representative of the S&P. It's moved to all-time highs. However, not all of the stocks, and this is the NYSE stocks, not all of them are participating. We'll take a look at the chart of the NYSE. And then we'll Eric, I'll answer that just a moment. And what we're seeing is the NYSE isn't rallying up quite as high, and so we'll see if this sets itself up into a clue that on some of the indexes that a short-term top may be in place. We shall see. Yeah, Eric asked the question, with the new alerts, will there be a shorter notice to enter? I.e., right now it's 1 to 15 days. That will be 1 to 15 days is when we anticipate the actual entry notification, Eric. That will remain basically this, that's our expectations. But what's going to be happening is that there will be a more clearly objective defined, here is the entry point that we are getting in at, and that will go out in a timely manner so everybody can participate, and we'll have that specified as, you know, an amount for the trigger. So Mike hasn't joined us back. I hope everything's okay. He just kind of dropped off. Hopefully it's not inclement weather in Dallas. So here's where we sat as of about 9 o'clock this morning Pacific time. All the indexes were up, both year to date and also above their all-time highs. And so everything just continues to push. One thing to note that's very interesting is that the NYSE, which is a composite of more stocks, the majority of these, it is not pushing into new high. It's close to up to new high territory, but it has not pushed through all the way at this point. And so we'll be taking a look at the chart of that. Matter of fact, we'll do that right now. I'm keeping an eye on the list here to see if Mike's checked in with us. And at this point, he has not checked back in. So here we are in the S&P. The S&P came back, did a nice little pullback in that last week, just below the breakout level and broke back above it on Monday, Tuesday, Wednesday, Thursday, Friday, and has done nothing but just go straight up over the last 5 days as it's pushed up to its new highs. We took a look last week, and let me get rid of that. I threw a fib on this low from this swing low up to this point, which may be a swing high, maybe not a swing high, just to see what is to be anticipated. As we can see, we had a pullback into the moving averages and then a break back above the 8, and then it took off for the rest of the week. About a 7% move for the week, which is actually quite high. If we go back a little bit, let me go here and here, and we'll throw a new fib on that to see how we are, how's it doing on pushing up to that new high. Grab that one, go over here and grab this one. And as you can see, I mean, from this move from here to here, it is pushing up very close up to the 1618 retracement at the 2261 level. Now, it can hit that and push all the way up through it, but that would be an interesting place to at least be aware that that's where some undefined possible resistance could be setting. And because the fibs tend to attract action, and that would be a potential upswing up into that area. When we got to the let me make one little slight correction to this. Activate. No, I don't want to activate. I want to edit. Edit. As you can see, typically on extensions, what we're looking at is the two primary levels of resistance where a price move will start to slow down is at approximately the 1236 or the 1618. It didn't quite get to that on its initial surge up, but it has clearly cleared through the 1236 on Wednesday, the big move Wednesday, and then continue to proceed up here. What are we seeing on the, we've got a slight bit of divergence on the True Strength Index on the S&P, and a clear amount of divergence on, with this move up on the momentum indicator. Same thing as we see over here on the weekly chart. It has pushed up to new highs. The TSI has not. It looked like the TSI was going to roll over last week, but it surprised us and moved on up. Anytime the TSI gets above, on the indexes, gets above 50, that is considerably an overbought condition, and it doesn't spend a lot of time above that level on a daily chart. Same thing. So that's where we're sitting here. But at this point, there's no indication that that it wants to reverse at this time, other than just do a straight pullback. We're extended a long way away from all the moving averages, and so what's going to need to happen is that either we're going to pull back into the moving averages like we did week before last, or week before this week, and then pops up. So we need to pull back into those, and as we say, we're still in an uptrend. We're still in an uptrend. And so that's the S&P. Let's take a look at the NASDAQ quickly. Okay, the NASDAQ 100 has moved on up and made it back up into this resistance zone that is associated with its past highs for the year. And as you can see, sellers have come in at this point, at least at this time in the market today. Sellers have come back in and have pushed the price back down. Will this turn out to be a shooting star type of candle? We'll have to wait to the end of the day to see if that's the case. Clearly, we've got a little bit of negative divergence going on in the True Strength Index. Also on the momentum, and it is much more clear on the weekly. Look at how the TSI and the momentum are just barely budging. Now, if we get a breakout, it may shoot up, but right now we're moving back up into the past highs, not hardly moving. Take a look at the composite. Now, the composite actually has pushed up into new high territory. But on today's candlestick, if it stops right there, we would have a doji, which is not a reversal signal, but what it is just an indication that the market is ready to do some resting. If you get a series of doji, that means that can have a more ominous meaning, but it just means that, hey, right now the momentum is lagging a little bit. We see similar type. Let me get my pencil here. And we see something similar going on here. We've got negative divergence here, negative divergence here. The momentum has bounced up a little bit, but it's just kind of going sideways. Same thing here, negative divergence, new high, not making a new high. And so we'll wait and see if we break back down, or if this accelerates. If it accelerates dramatically, that would continue to push this higher. But right now, it's showing some negative divergence. The aspect to remember on negative divergence is just because we have negative divergence, that is not a indication that the market is going to totally reverse. The market can still push higher. So it's the negative divergence in combination with reversal price patterns that gives us the clue of what's going on, and when a reversal will take place. At this time, as we see, extended away from the 8, the 20, and the 50. We had come back and retested last week all the way down to the 50, then it exploded higher and moved up. The Russell has been just just really on fire from just prior to the election. Shot up, another rocket ship ride this week. However, what do we have going on here? We have a doji at a level of resistance. What resistance is that? Well, we can figure that out a couple of ways. One, we can take the indication from here. It pushed above the 618 retracement, and is now looking for, will it push on up to the 2618, which is the next level of strong resistance or not? Like right now, we don't know. If we take, I'm going to get rid of this one. And let's just go over to this longer term chart, which is the okay, this big swing. And as you can see, that is not telling us a lot. We'll go to a closer one from here to here. And it more or less tells us the same thing that we had from tracing from here to here. It got up to the 1618 retracement, fell back down below it, but then retook it. And for those of you who do trade who like to trade the Fibonacci's, is the way you utilize these Fibonacci levels is basically you're looking for a break down below. And so if you would have gotten into a short position here expecting it to fall all the way back to this breakout support, as soon as it starts to pop back up above it, that's your sign to get out and or go, and then also a sign to go long into a new upside trade. So that's the way we would use the Fibonacci's. Again, similar type situation, pushing to new higher prices on the index, but on the weekly momentum, look at this. We actually have pushed up to above this past level here. So we'll see. So now we're starting to get some divergence between the TSI on a weekly basis and the momentum. So that's something we'll be keeping an eye on. So at this point, how would we want to be, looking to trade this? Is we're getting our second surge up, second thrust up. Now, if this one is of less length than this one, which it appears like it will be, that's also telling us that the momentum may be waning a bit. And if we get a pullback that's a little bit deeper this time, let's say back into wherever the 20-day would be, and it actually hits the 20-day, that is also an indication that momentum may be lagging, and then we'd be looking for a move like this, lower high, and then a retreat at that point. Is that what's going to be going on going into the new year? At this point, we don't know. But those are the kind of things we look at. Whereas it starts to shape up like that, we'll be ready for that. Just a second, guys. I want to. Always concerns me when somebody just drops offline the way Mike did. So I just shot him a real quick text message to see what's going on. So that's what we see happening with the indexes. Any questions on the indexes at this time? Okay. Well, let's run through the rest of our slides, and we may have time to take a look at a couple of stocks. There's that. Okay, path of least resistance. I think the higher we push, the tougher it's going to be to push higher. I think from a pullback perspective, I would have to vote over here that I think that we are due for a pullback. Will that be resulting? One of the things that this little push up this week has done for us is as we go into the Fed, if we get a negative reaction with the markets to the Fed decision, there's more cushion there where we could get a very violent reaction back down to some of those stronger support levels like the 20 or the 50-day moving average, and then a bounce back after the Fed news is out of the way. So it will be very interesting. Over the short term, we may see a little bit of a pullback and then some sideways movement into Wednesday. And then after Wednesday, then the market will decide which way it wants to go from there. All I know is, and Mike and I differ on this just a little bit, in that I agree that the fundamentals and the internals of the indexes have not changed from pre-election, but at the same time, there seems like there's an emotional response being over, some optimism about what may be going on from a business perspective, making the U.S. government more favorable to business, putting more people to work and that type of stuff going into the first 100 days of the new administration. We shall see if some of those promises are actually kept, because the market's definitely reacting, since the market is one of those things that it's forward-looking, and what it's pricing in today is what it anticipates, a month from now, 2 months, 3 months from now, and so it's pricing in an expectation of a lot of good news for the economy. So we'll see. Okay, here's where we sit. We have 3 trading weeks left in 2016. We will push to, I've got about an $8,000 amount to make up so I can hit the $40,000 mark for the year. And so we'll be working on that. Here's where our equity curve closed. Strategy 1, which is the stock and ETF strategy. Those of you who've been following our premium members, I'm really expecting some good movement in strategy 1 going through the rest of this year and into next year. I think we have a stable of very good leveraged ETFs, along with we will also put in some stocks as we go that are good quality growth stocks, so that and we'll be really focused on having 4 positions, no more than 4 positions, and we'll be dividing our the capital allocated for that strategy by 4, and then we'll work within that either a quarter size position, half position, or a full position to build up, and we'll be catching those earlier in their runs. So as I said, we have 2 webinars for the month of December for the Bay Area Moneymakers, presentation on to the Atlanta Bold Traders. I did that on Wednesday. No, I did that yesterday evening. And then training this coming Wednesday at 6:30 for premium members, learning to listen to the market. We're in the process of updating a lot of videos, how to do strategy 3, that has been updated, timing entries. And as I said earlier, I will be sending out a link to everyone who's on this presentation and everybody who has basically is on our email, our mailing list. I'll be sending out a link to everyone that just a courtesy and a thank you to you, an hour's worth of presentation on an objective entry utilizing the 8-day moving average, and then the 5 exits for profit. So if you do have a group, no matter where it's located, and you would like a presentation, and if you're an IBD group and you would like to to have a presentation from an IBD, I have a couple of very good IBD type presentations. I do not get in, and you guys, and most of you know, I am not a big marketer, and so I don't do a lot of advertisements or anything like that. I just basically, I'm an engineer, and I just love to share with folks. And so, yeah, Eric, I did get that on the Raleigh IBD. Oh, sorry. You should put the first part of the sentence first, and then I wouldn't have. Second part of the sentence says, don't respond out loud. So one reminder of the active trend trading system, basically we follow the 5 pillars of active trend trading. We identify what we're going to trade, top quality IBD growth stocks, and or index ETFs and regular leverage ETFs now. When to enter, when to exit, what strategy we're going to use, and what to expect. I'm a firm believer that in order to trade various strategies, you need a good, solid foundation of a proven system. And here's the strategies I choose to trade. I don't expand this into like 10 different strategies. I want to be focused on a few, because our focus is still on the folks who are working for a living, who do not have a lot of time to dedicate to learning about, they want to learn about the market, but they don't have a lot of time to do a master's level education program on the stock market, but they want to be in there trading and following some good patterns. So those of you who are following strategy 3, which is the wealth and income, where we basically own long leaps, and then we sell premium against that every week. We closed out our spider trade, which we had entered. We had bought the long positions on the 4th of January this year. Over that time period, we basically had a win-loss ratio of 0.79. The average income per week was $165.9. That's and which approximates about $686 per month. Combined with what we took in was about $8,000 plus the residual value that was in the 2 long leaps. We closed this position out this week because we had a time stop on it that was to close this coming Friday. But we overall, for the length we held it, we made a little bit over 34%. My target was to be up there closer to 100, making 100%. But a couple of things were issues. Volatility was a little bit lower this year than normal, and just some really wild swings in the market. What I'll be doing as we move forward, I'm always looking to sharpen the saw, and there'll be some more additional refinements to the strategy number 3 as we move forward. Those of you who join me, the premium members who join me at in the next hour for the live trading session, we'll be chatting about those, and I'll be also covering those on Wednesday night. So with that said, I'm offering a special membership. I don't do this very often, but a special membership through the end of December. 40% off the regular monthly active trend trading system, and about a 60% savings on the early warning alerts. That Mike drives all the early warning alerts. And if you're interested in that, all the websites that are linked to memberships on the website all will link to this special. And that'll be effective until December 2016. So with that, we'll see you next week. Have a great weekend. Did anybody get to watch any of the festivities and of honoring the Pearl Harbor Day of Remembrance here? It was really, truly amazing. If you've never been to Hawaii, oh, your cousin attended, that's cool. If you've never been to Hawaii, if you come to Oahu, please go by and see the Pearl Harbor Memorial. It is something that will just, it kind of just stops your heart and really makes you kind of choke up. My dad was in World War II. He was actually on a ship coming from San Francisco to to the Pacific, and was out to sea when the attack happened, but they pulled in a few days later and saw the devastation and all that kind of stuff. And so it's something that's etched in my memory because of his memories, but it was really something else. So for those of you, we will be doing the premium membership next, the final hour. And then for those of you who are interested, we have set up a Twitter account, and it's actually trend traded at trend_DWW. And that basically is it for today. Oh, HBO has a great documentary. That's awesome, Scott. Yeah, I'm kind of a patriotic guy. I think it was spending that 23 years in the Navy. And yes, you do have to log out and log back into the next session. I'm going to look at just a couple of stocks. I've got about 5 minutes. And so if WB, WR. Hey, let's take a look at WR, because that was one that we were tracking earlier in the earlier this week, hoping for a good movement on WOR going into earnings. Excuse me. Okay, come on. We're looking at WR for, hold on just a second, folks. Okay, on WR, we had actually put in an order to buy this on Tuesday of this week if it got back down, you know, oh gosh, I think we wanted to get it back down into the 55.90 level. Never got down there. It was nothing but, you know, and so it turned out to be a day order that just canceled itself. And so what are we looking for now? Earnings coming up, 219 after market close, AMC. We're getting a slight pullback at this point. So we know we've got, you know, where do we want to look? Well, we've got the 20-day here at 56.87. We've got the, you know, we also have some support here at about the 56 level zone down to about 55.61. So on this one, what I'd be looking for is, you know, we could still get a nice run into earnings, or it may just be rolling over to drop, you know, into earnings, going to come back here and test on the 50. But if we do get a substantiated stop here and rebound, that would be where I'd be interested in this particular trade with a stop immediately below those levels. And then I would close it out prior to the earnings on the 19th. And so, you know, because if it moves, we get in here at about, let's say 56, what's our expectations? Well, my expectations are to draw a line, not a fib. What are my expectations? Basically 56. If I move up to the past highs, that would give us about a 6% move over just a few days. If we ran all the way up to the past highs, then, you know, say up here at 60, that's about a 10% gain. And as you can see with WR provides some significant moves and does it very quickly. I was really impressed with it as I did some of the back study on it to make a couple of presentations using that as a, and it does a fairly good job of putting in good patterns, or at least pullbacks into levels like it likes to pull back to the 20 and or the 20-week moving average. And so we'll see what happens. Is it going to stop there at the 20 or go on down here and test at $56? At this point, we don't know, but we know we don't want to buy it yet because there's been no indication that we're going to flip around and move back up. Let's see, WB, Weibo. Okay, actually, let's see what kind of, yep, good volume. Slight reduction in volume as it's gone into this pullback, still in that mode. On a excuse me, on the weekly chart, Tracy, you know, basically you can see you've got good support there at about 45, and you've got some initial resistance at about 52, and some more resistance at about $54 to $55. So you know, this move up kind of tells me on lower volume that this may be a head fake, where we may get down here and settle back in here. But if you did take this move, coming back and retesting off the 8-day, you know, it's still in buy range. If you know, that's what you would be looking at. I'd have to run the stock checkup on it to see if it's something I would want to get into. So here's a couple that we are also looking at AEIS early in the week, and as you can see, we got a nice little push up off of support at 52, came up. Unfortunately, now it has put in a lower high bearish engulfing pattern, and it hasn't dropped the 20 yet, but it looks like this, you know, if it continues to break the 20, then we're probably looking at a roll all the way down to the, you know, at least the 51.50, all the way down to the 50-day moving average. So far, this bearish engulfing is not on higher volume, and so that's a good thing. Looking at, you know, just cover this really quick. We had a bearish engulfing here. We had a strong downside candle here on increased volume. So the sellers are in town, and what we may be seeing right now is just a slight reactive, you know, move up before the sellers take back in chart, you know, take back over. Because, you know, right now it is still in an uptrend, but it's been a very significant uptrend, and has, you know, it's gone up over the last, go back to the beginning of the year, it has basically gone up about 127%. And so, and I'll do one more, ACIA, and then we will call it a day. I'll get rid of my other drawings. Okay, ACI, it's basically you know, an IPO type stock, and right now we've got good strong support down here at about between 60 and 61, so that's a zone where we have some support, 61, and right now it is moving sideways within that. On a longer term weekly chart, the 8-week is crossed below the 20-week, which is reflective of the 50 crossing below the 100. Hasn't happened on a daily chart yet, but right now it's looking like we're going to continue in a downtrend. And I'd be looking for, you know, somewhere between 65, if this has really great fundamentals, and from what I understand, Acacia does have those great fundamentals, because it was on the IBD 50 list for a while, then I'd be looking in here, watching for positive divergences on the oscillators, and then also looking over here going, okay, this is bounced down, momentum is at lows, and you know, I would want to see some indication, confirmation that we're getting a good turn to the upside. So that's what I'm seeing for Acacia and the rest of those. Okay, guys, I'm going to call it a day so we can get ready for the next session. And just look forward. And again, thanks for joining us today. I'm going to check my text message to see, make sure Mike's okay. And then we'll proceed from there. And we'll see you guys in about 15 minutes on the final hour of trading. Have a great day. Goodbye, everybody. God bless.